Hi everyone, welcome back to Property Investor TV. Today we're going to talk about something that can be a bit tricky but incredibly powerful for property investors: bridging finance. So let's start with the basics. Bridging finance is essentially a short-term loan that allows you to access funds quickly when traditional lenders say no. Now, I know what you're thinking: high interest rates and tight repayment terms don't exactly scream low-risk investment. And you're right. Bridging loans are not for everyone. But for the right investor, at the right time, bridging finance can be a game changer. So let's dive in and explore some of the pros and cons of using bridging finance for your property investments. Insert animation or graphic illustrating bridging finance process. First, let's talk about how it works. Bridging loans typically have interest rates ranging from 0.5% to 1.5% per month, which is much higher than a traditional mortgage rate. And repayment terms are usually quite short, anywhere from 3 months to 18 months. This means that you'll need to have a solid exit strategy in place before taking out a bridging loan. Insert example of successful bridging finance deal. Now, let's talk about some of the benefits of using bridging finance for property investments. For one, it can provide access to funds quickly when traditional lenders say no. This is especially useful if you're looking to flip a property or secure a new development opportunity. Bridging finance can also be used to purchase properties at discounted prices, giving you an edge in the market. And finally, bridging loans can help you avoid costly delays and missed opportunities by providing the liquidity you need to take action quickly. Insert animation or graphic illustrating pros of bridging finance. Of course, there are some potential downsides to using bridging finance as well. For one, high interest rates can eat into your profits if not managed carefully. And repayment terms can be tight, which means that you'll need to have a solid exit strategy in place before taking out a bridging loan. Insert animation or graphic illustrating cons of bridging finance. So what are some real-life examples of successful bridging finance deals? Let's take a look at this one example from our portfolio. Insert case study. This investor used a bridging loan to purchase a property that was in need of renovation, and then flipped it for a tidy profit. By using bridging finance, they were able to access the funds they needed quickly and avoid costly delays. Insert animation or graphic illustrating real-life example. So how do you get started with bridging finance? Well, first you'll want to educate yourself on the process and potential risks involved. This video should give you a good starting point. Next, you'll need to find a reputable lender that offers bridging loans. And finally, you'll need to have a solid exit strategy in place before taking out a bridging loan. Insert animation or graphic illustrating getting started with bridging finance. So there you have it, bridging finance explained for property investors. Whether you're an experienced investor or just starting out, this video should give you a comprehensive understanding of how bridging finance can be used to unlock property investment opportunities. Thanks for watching, and we'll see you in the next video.